G'day, I'm Scott Phillips, the Motley Fool's Chief Investment Officer here in Australia, and welcome to the reborn, the reimagined, the re-kickstarted Motley Fool Stock of the Month, where we bring you a recommendation from one of our services. That's right, we give you a peek behind the curtain, giving you a little bit of the good stuff from inside. Members pay good money for this sort of stuff, by the way. So we're just giving it to you, putting it out there, basically for a couple of reasons. Firstly, so you can see what and how we work at the Motley Fool, so you can see some of our analysts and have a chat, hear from them at least. You can't chat with Mike, can hear from the analysts and see what they are presenting. We do it because you don't often get a chance to see how we do stuff at the Motley Fool. So if you're considering joining, then we hope it's useful. And frankly, we're also here for educational purposes. And if this, either the company itself or the way we think about it, helps your investment process, then we've had a win, and hopefully you've had a win too. So that's Stock of the Month. Normally the first week of the month, probably on a Friday on YouTube, is when we think this will likely go live, and every month about that time. So look forward to that one. Make sure you, speaking of which, do please, if you're watching this on YouTube, and you should be, I think they're all going via YouTube, please do like the channel. So it's like the video, subscribe to the channel, and click the little bell down the bottom. Once you've subscribed to the channel, it means you'll be sent alerts when we publish this sort of stuff. And we've got a whole lot of great stuff coming. We've got Stocks in Focus, we've got Stock of the Month, we've got What I've Been Reading, where the guys will tell you a little bit about what they've been, whether it's a book or an article or something else. That's what we're just trying to do, is bring some content into the YouTube spaces. The interwebs apparently are a big thing these days, so we're going to try and do that a little more. We have done it in the past. I fell by the wayside with resource constraints and other things, but we've been able to bring it back, which is pretty exciting. That's a long preamble. I'm going to add a little bit more, and then I'm going to introduce you to Mitchell Lawler. I want you to note a couple of things. Firstly, this is general advice only. What does that mean? It means we're not giving you personal advice. I can't tell you what you personally should do. Mitch will say, hey, here's a company I like, we think it's a buy. That's true. Is it a buy for every single person? Well, you have to decide that for yourself. We can't do that for you. We're not allowed to give that advice. Personal advice is a whole lot of paperwork, frankly, other things. So please note this is general advice only. The second thing, hopefully the last thing, this is a buy recommendation at the time of recording. Now, we're recording this in very early April, so please bear that in April 2025, by the way, because you could be watching this years later. Our views may change. Maybe the valuation changes, maybe our conviction changes, maybe the company changes. So it's a buy recommendation right now at this moment, but please realize that we're not going to be able to tell you where to sell on this format. This is just some buy ideas, but also our views could change. Hopefully not too quickly. We're trying to find our long-term investors. We're trying to find stuff that you can buy and hopefully hold for years if things will turn out well, but we can't guarantee that'll be the case. So keep that in mind. All right, Mitch, that's a lot of me speaking. So I'm going to introduce you, Mitchell Lawler. You are the newest member of the Motley Fool investing team, but you've been with the Motley Fool for years now, and we're stoked to have you on the investing side. You were writing for fool.com.au, our editorial free site. So thank you for joining the investing team firstly, and thank you for joining me for this video. How are you?
Yeah, well, thank you, Scott, and thanks for having me.
Mate, absolute pleasure. By the way, guys, Mitch is a very smart guy, so pay attention. Good thing is you can always rewind it, watch it back. Mate, you're going to talk about a company I think most people have heard of. A lot of people have some knowledge of. Let's talk about ResMed. RMD is the ASX code. Just before we get into the investment case itself, tell us about the company. What does ResMed do?
Yeah, sure. And first, I'll disclose that I own shares in ResMed, so just to put that out there. So yeah, ResMed, a bit of a backstory to the company. Most people probably know the company, but don't know that it actually started the origins are from Australia. University of Sydney, a professor by the name of Colin Sullivan actually invented the continuous positive airway pressure, or CPAP machine that we know today. But it's actually headquartered in San Diego, California. But essentially a CPAP machine that we know today treats, when it was patented, snoring sickness, but we know it as sleep apnea. And where ResMed comes into the frame is the founder, Peter Farrell, actually acquired the technology to ResMed from Baxter when they didn't want to actually go ahead with commercializing the product. So it's a non-invasive way of treating sleep apnea. There's other methods to deal with it, but as a non-invasive method, it's actually become quite popular over the years. And it's a beautiful example of a razor and blade business model. Some people may not have heard of that before, but if you look at a razor, like your Gillette shaving blade, you buy your razor, you keep it, but you're then locked into buying that brand's razor blades repetitively. And the CPAP machine is quite similar. So you buy the actual device, it's the workhorse behind treating sleep apnea. It filters and humidifies and pressurizes the air that's then delivered to you for preventing the collapse of the airway, which results in the sleep apnea. And then the blade component of the business is the CPAP mask. So these masks have cushions on them, and they over time begin to wear, so they'll need replacing. And typically people will be locked into that ResMed mask, and they'll continually purchase the CPAP mask. And then in addition to that, there's filters, there's tubing, and they actually are recommended to be replaced every 2 and 12 months. So the consumable part of the business is not inconsequential. It's actually a meaningful segment. I think in the latest quarterly result is around 32% of the 12-month revenue. So that's a reasonable share, and I quite like that part of the business, because we know that customers, even though they purchase the CPAP machine once, they're then going on to repetitively purchase and give their money to ResMed through those consumable products. And then I guess the other part of the business, how they make money, is through software, the provision of software, or software as a service, as it's commonly known these days. And ResMed calls this part of the business the residential care software. So this is software that's used in applications or settings such as aged care, where they need to manage the people that they're caring for on sleep apnea devices or CPAP machines. And so this handles billings and claims on the out-of-hospital portion of ResMed's business. So it's expanding. It's only about 12 or 13% of revenue currently, but it's an expanding part of the business, and it's quite high margin compared to their products portion of the business, where a physical product is much harder to have a high margin, as opposed to software where you can sell it repetitively, you only make it once. So basically that's how ResMed makes their money, through those different portions of the business. And it's been around for, the origins date back to about 44 years. So it's been around for a fair while now, and I think it'll be around for a long time to come.
Beautiful summary, mate. That is a really, really good one. Love the detail. I'm just going to quickly, the CPAP machine, for those who kind of don't or can't visualize it, it's one of those surgical type masks that goes over your nose and mouth, strapped on around the back of your head, and the machine blows air into your lungs. The continuous positive airway pressure is literally just the mask fits on your face, so there's no leakage of air. It keeps that, as you said, Mitch, the airway open, keeps people breathing. And sleep apnea is effectively when we stop breathing for periods of time during our sleep. And so the idea of a CPAP machine is to solve that sleep apnea, that lack of breathing, by effectively doing the breathing for us when we're asleep, and keeping that positive pressure. Is that a reasonable summary, mate?
That's right on. Yep.
Beautiful. All right. So that's what the company does. Super thorough. Thank you very much for making all that work, doing that work. Let's talk about the investment case, because there can be great companies with poor investments. Occasionally, a poor company would be a great investment, not very often. But it's, saying what talking about the company does is one thing, and it's obviously been very successful as a business. But two things: we have to know whether we're paying the right price, and secondly, how bright the future might be. Tell us the investment case for ResMed.
Yeah. Well, firstly, I want to talk about Terry Smith, who's a really phenomenal investor. Runs a fund by the name of Fundsmith, and he quite often mentions this concept of mean reversion in profits. So essentially, when a company is earning abnormal earnings or earnings margins, that would traditionally revert back to the mean or the average. And in order to prevent that, you really need the business to hold some sort of competitive advantage, or what Warren Buffett often calls moat. And I think in the case of ResMed, it's that installed base of the CPAP machines, which customers are then essentially locked into. A real sticking point too is ResMed's forward thinking through connected devices. A fair while ago, they actually made the decision to roll out all CPAP machines with full cloud connectivity. And to put it into perspective, how forward thinking it was at the time, this was when Apple, which I own shares in as well, but Steve Jobs and Apple launched iCloud in the same year that ResMed decided to go full cloud connectivity. So it was
That's cool.
it was well ahead of their time. But in doing that, it's enabled a lot of data stickiness. A customer becomes informed through that data, and it's sort of like Spotify or anything like that, where once you sort of build out that data, you don't really want to give it up to move to a different platform. It's a real sticking point. So I think that is a real advantage of ResMed. Another point is it's a free cash flow machine, and currently it trades on about a free cash flow yield of about 4.3%. Now that's quite attractive, I tend to think. Traditionally, when we look at companies with long growth runways, which I think ResMed has, you would see a free cash flow yield that's lower because investors are willing to pay a bit of a premium, take a lower return in the present for a larger return in the long run. And I think ResMed is one of those opportunities where we have a good return in the present and potentially a good return into the future. So the valuation is fairly attractive, even though it's run up quite highly since its recovery that occurred after a share price fall about 2 years ago, when we saw the proliferation of weight loss drugs or GLP-1s, as people may have heard of them. Another aspect that's quite attractive to ResMed is the family ties in the business. So Peter Farrell is the founder of the company. He gave up the reins to running the business to his son back in 2013. And so now Michael or Mick Farrell runs the business, and he has a large financial stake in the business. I think it's about $100 million worth of shares. But in addition to that, there's that emotional sort of incentive there as well. I mean, when I look at companies, I tend to invest in founder-led businesses. And if you can't get a founder-led business, then the founder's son is pretty close to that. There's still the incentive to want to build a legacy on behalf of his father. So I think there's a strong emotional incentive to drive long-term value creation for shareholders. And then I would say,
go on.
Sorry, one more.
Yeah, go please.
Also the brand, like ResMed has built a phenomenal brand over these years. I mean, having the origins based on the actual invention of CPAP distinguishes it from many of its competitors. And the whole sleep apnea industry is quite a duopoly. It's essentially ResMed and Phillips Respironics. Phillips suffered quite a severe recall a few years ago, and through that they ceded market share to ResMed, where ResMed has been able to maintain its strong brand. And I think that has really put ResMed in a strong position after Phillips suffered that recall.
Nice, mate. I like it very much. Give us just 30 seconds on the growth story. You said you think it's got a long growth runway, and that needs to be part of your thesis. Obviously, you talk about the free cash flow yield. By the way, quick one. Free cash flow yield is effectively the inverse of a price to free cash flow. We do have price earnings ratios or PEs. You can do a PE in reverse. So something with a PE of 20 is got an earnings yield of 5%. So it's earnings divided by price rather than price divided by earnings. In this case, free cash flow yield, let me spit that out, is the inverse of price to free cash flow. So another earnings-based metric. Just if you're thinking about that and wondering, same kind of idea, using free cash flow rather than earnings. You can dice up cash and earnings in lots of different ways, but free cash flow is a lovely way to do it. So Mitch, thank you for bringing that. But let me get back to that, the growth piece, mate. What gives you confidence in that long-term growth story?
Yeah, essentially it's the large market and ResMed's leadership in it. So at present, ResMed has about 26 million CPAP machines out in the market today. They estimate that by 2050, they could have about 120 million machines.
Wow.
And that sounds enormous, and it is, but the actual estimated market, and this is from ResMed, so take it with a grain of salt, but I think it's a fair indication. They estimate that the potential market is about 1.2 billion people by 2050, and that's even taking into account a reduction from GLP-1s, which are weight loss drugs. And the concern there is there's quite an overlap between sleep apnea and obesity. So if you can treat obesity through these weight loss drugs, then potentially it could reduce the need for sleep apnea treatment in the long run. But yeah, essentially the market, the runway for growth is enormous. And as long as ResMed can maintain its leadership position, which I think it can, it should have plenty of opportunity to grow its value for shareholders.
Beautiful. Thank you, mate. Now, we always at the Motley Fool, whenever we make a recommendation, we have a section usually called risks and when we'd sell. Now, that doesn't mean that we're not balancing. This is not 50-50. Mitch likes things to buy. He owns shares, as he said himself. So there's not a case of, this is why you shouldn't buy, but it is one of those things. Every company, every investment has risk. And so we always want to bring you not only the good stuff, because, we think it is a buy. We think, investors will beat the market. That's a buy at the Motley Fool means we think this is a market-beating investment. But it doesn't mean there aren't risks. Just take us through some of the risks that confront an investment in ResMed today.
Yeah, sure. And I've just mentioned GLP-1s. I think that is probably one of the greatest risks facing ResMed still. A lot of it is up in the air. There's still trials that are going on to assess how effective it is in actually treating sleep apnea through that weight loss. At this point, CPAP machines are still considered the gold standard in reducing those number of events of where you essentially stop breathing during your sleep. But yeah, the largest companies in the GLP-1 space, they're looking at converting from injections to tablets, which are much more palatable to a wider number of people, reducing the cost. GLP-1s are quite price prohibitive at the moment. To get a off-script fulfillment of it for a month, I think the price is around $1,000. Over a year, 12 grand, as opposed to a CPAP machine that might set you back $2,000. So, at the moment it's price prohibitive, but that could change. Another risk is the competition. Now, Phillips had that recall, but there's nothing to say now that that is in the past, that they couldn't come back to market quite strong and begin to actually claw back some of that lost market share. There's also alternative methods of treating sleep apnea, such as hypoglossal stimulant devices. They're more invasive and they haven't really gained much traction at this point, but it's still a risk there that they could get increased uptake. And I would say the last risk is ResMed itself sort of suffering a recall. Now, I don't think that there is any high chance of that. I think ResMed has certainly prided itself on quality over the years, but it's a non-zero possibility that's always on the table. And we saw how that affected Phillips. So how it would affect ResMed would probably be in a similar vein.
Nice, mate. I like it. So yeah, plenty of potential for risk, but plenty of upside, more upside in Mitch's view, and certainly it's a buy recommendation for at least one Motley Fool service is why we're bringing it to you here, mate. Let's wrap this up with the elevator pitch, 30 or 60 seconds. Why should our viewers consider? Again, we can't tell what they personally should do. Why should they consider an investment in ResMed shares?
Yeah, so ResMed, it's a market leader in the industry. The industry has enormous growth potential, as I discussed previously, 1.2 billion patients by 2050, potentially. The valuation is still relatively attractive, even though the price has run up quite highly over the last couple of years, with a 4.3 free cash flow yield. That's quite a good return. I think that will continue into the future. The stewardship of the business being led by the founder's son, Mick Farrell, both financially incentivized and emotionally incentivized through his connection, wanting to build that legacy further. Essentially, this is a high quality business that has been around for a long time, and I think a long time to come. So at a reasonable valuation. Beautifully done.
There you go. Thank you for watching Motley Fool Stock of the Month. A cracker to get us going again after a long hiatus, but we're back. We'll be back every month. First Friday of the month, hopefully, is when this will hit YouTube. Mitch, thank you for sharing your expertise. Thank you for watching. We hope you found it useful. We hope you'll subscribe to the YouTube channel, as I said. Hit the like button, hit the subscribe button, that little notification bell. So next time Mitch or one of our other gun analysts are at the table, you won't miss a thing. Thanks again for watching. And until next time, Fool on.